Hey guys, how's it going? Value investing here today. I can't even say my own name. Air Canada's down a little bit here, about 2.5%. And we're talking about Q4 2024 earnings and the full year earnings those are in. Saw it drop back a little bit today and it's been pretty range bound. Stock is still quite cheap. We'll talk about why it may or may not be. Um, and it hasn't really been doing much lately. So let's get into the financials that came through. What I've done here is I've done the last 4 quarters as usual for you guys here. I broke out this last Q4 because we have the yearly as well. And I've also compared it to the year over year. So that's Q4 23 and this is Q4 24. In terms of passenger revenue, year over year, we're up about 4%, 4.7 billion. And it dropped a little bit from last quarter and the quarter before that, but it's pretty steady throughout the year. Cargo revenue has been at an all-time high for this year, $293 million, and on a year-over-year basis, it's up 20%. So yeah, that's something that they talked about before. They want to focus on a bit, and I hope that they do. Other 385 million, again, very strong. Q1 was a little bit more than that, but we're still up 2% year over year. And total revenue was $5.4 billion. And of course, this is a quarterly record, I believe, and the revenue was a yearly record as well. So that's something really great to see. Up 4% year over year, down a little bit from the last couple of quarters, but pretty much in line there. But net income was a loss of negative $644 million. And we're going to talk about why that is. And we're going to go through the financials. We'll see there's some kind of extraordinary items there and some things that could be slightly concerning, but nonetheless, we actually swung to a loss this last quarter. So thus, the EPS was a loss of $1.81. Cash was about $7 billion, dropped a little bit. But of course, they've been utilizing different things like share buybacks with the cash. And we'll talk just briefly about that as well. So in terms of the income statement here, we're looking at a year over year basis. It's 2024 versus 2023. Every segment was up year over year. 19.7 for passenger billion versus 19.4. Almost $1 billion in cargo revenue now. It was getting close the year before, but we're still up. And other is, well, actually, I lied. Slight down. Other is slight down by 1504 versus 1506, but their total revenues are 22.25 billion versus 21.83 billion. So if a company was being properly managed, you'd assume that their operating income would be going up and their net income would be going up. But like we've all known what's going on here, we do have some other costs. They've done pretty well with their aircraft fuel. They've talked about this. They've talked about basically the forward looking curve on fuel, getting into derivatives here, that they think that it's going to come down still a little bit. But we'll get into that a little bit more as well. But the big one here being wages, salaries, and benefits. It's about $1 billion more. So if you added that $1 billion, hypothetically to the bottom line, we would have had net income for the year of 2.7 billion versus 2.27. So it would have been up significantly, right? But we've had that pilots new agreement, which is up roughly 40% for their wage. There's some pension adjustments. We'll talk a little bit about that. So that's pretty huge. So the rest of the things were pretty much in line. So the total operating expenses, of course, were higher, almost $21 billion versus 19.5 billion a year ago. So that gave them the operating income of 1.26 billion versus 2.27 billion. And it gets a little bit worse again down below here when we're looking at non-operating expenses. Because of the strength in the US dollar, we have seen them have this foreign exchange loss. So, I mean, it was pretty close last year as well, but, maybe accelerated a little bit as well. We had a couple other line items here as well, but the net effect of that total operating expense was 748 million versus only 67 million a year ago. And then so that translates into a bottom line net income for the year of 1.7 billion versus 2.276 billion. So I can kind of see where the stock would go down. I don't particularly like this. I mean, the unions are usually quite expensive, and I would anticipate prices are going to go up because when these operating expenses increase, the company is going to have to do something, right? But we haven't seen that yet. But it is very promising to see that the company is growing, and we'll talk about their guidance, where they're getting in the future. of what they're thinking. Now, this is the fourth quarter, just a little bit more information I dug through to get it for you guys versus the fourth quarter of 2023. And what it was in here, there was a $490 million pension adjustment. So you can see that it's being placed under wages, salaries, and benefits. I'll leave this up on the screen here if you guys want to review a little bit more. Just kind of gives you a little bit more information on that quarter in terms of some of the breakdowns and whatnot of that quarter, because I only had the spreadsheet that only had a couple items. So if we go to statement of financial position, or aka balance sheet, not much here to talk about, just the 6.9 billion versus 8.5 billion a year ago. Our current assets, I'm not sure if you guys can see this. Our current assets are, our total assets rather, are higher than our total liabilities. And of course, this long-term debt. This long-term debt got me excited here. This long-term debt, of course, they've been paying that down. They've been talking about that as well. They're really trying to focus on paying that debt down, but also focusing on shareholder value, and specifically that means buybacks. And speaking of buybacks, this was just a section that I found here as well. Normal course issuer bid. In November 2024, Air Canada received approval from the Toronto Stock Exchange, the TSX, to launch a normal course issuer bid, allowing it to purchase for cancellation in accordance with the rules of the TSX, and during the period from November 5th, 2024 to November 4th, 2025, up to 35,783,842 shares, representing approximately 10% of the public float, as of October 22nd, 2024. We spoke about this before. I'm not sure if I actually looked it in and found it here. So I like buybacks. I like dividends too. We'll talk about that a little bit. In 2024, the corporation purchased for cancellation, i.e. they bought them back, 20.2 million shares at an average cost of 23.92. They could have done a little bit better, I guess, where the stock's price is right now, for an aggregate consideration of $485 million. So they are utilizing their working that capital. Now, in terms of the conference call here, there wasn't really a lot that I really got from it that we didn't kind of already know. We knew that we had a full year revenue record. Again, so I like to see revenue records. Obviously, I like to see stuff like that. They canceled over 20 million shares, as I just showed you, and they're planning on continuing that going forward. Somebody had asked about, maybe mid-year, are we going to be looking at potential dividends? They seem to indicate that that's not really something that they're looking at this time. I think that they're trying to get rid of some of that dilution that occurred during the COVID times, right? But I wouldn't mind them. Let me know what you guys think. I wouldn't mind them doing like a little mix of the two, right? Like, give the shareholders that have been around for as long as we have something back that's a little bit more tangible. But let me know what you think. Tell me if you agree with me or disagree with me. Should they do all buybacks, or should they do all dividends? Or should they focus on growing their company more? The next point here, upward revenue trend is to continue. So as we've noted, their revenue trend is going upwards, and they're seeing that. They're seeing it out into Q1, Q2. They're still seeing that strength. 7 aircraft are into service in 2025, so not a lot has changed there. They've changed that they're not actively hedging for fuel anymore. If you recall, a while back, they weren't hedging. They said that they wouldn't, and then they started, and now they're not doing it again. But they are hedging cash flows in terms of US dollars. So they're trying to even out those cash flows, I think, to get more predictable earnings, especially on an adjusted basis. This is what we spoke about before, just redundant here. In the midterm, there's no dividend, but still share buybacks. And in terms of guidance, the current guide does not include potential tariffs. So that's something to keep in mind. Like, we all know what's going on right now with all these U.S. potential tariffs on Canada, Mexico, all that. My personal opinion is I don't think any of that is going to go anywhere. I think it's all just negotiation and scare tactics. But hey, again, another thing I'd love to know your guys' comment down below. I think that's what that is. But if this did turn into a full-blown trade war, you're gonna see an effect on the company. And specifically, Air Canada said that they would plan to basically change routes, things of that nature. So that's something that could definitely spook investors for sure. I think the probability of that happening long term is probably not very likely, but again, that's just my opinion. Um, but yeah, I'd love to know what you guys think on that one as well. So overall, I think it was a pretty good quarter. Aside from a quarter and a year, I guess. Aside from this, they need to do something about this, in my opinion, or they need to somehow raise prices if they can. But it sounds like there's quite a bit of competition right now. So that means that this stock could maybe be a bit range bound for a while. I don't see any catalyst moving it, propelling it forward um, anytime soon. But I'd love to know what you guys think about that. Let me know. Leave a comment down below. Don't forget to like and subscribe, and I'll see you guys in the next one.